Hello, now it's time for a look at the global financial markets and key technical levels to watch in the week ahead with myself, Rowena Harris-Doughty, and our senior market analyst, Jasper, Lawler. Now, Jasper, it could be quite a quiet start to the week because of the bank holiday Monday in the US and the UK. So I just want to do a quick recap on the week just past because some of the talking points we discussed last week is actually going to be, moving markets perhaps in the week ahead. The movement we saw in oil prices on the back of the OPEC meeting. What's your outlook for the commodity going forward?
Well, it was quite interesting, the difference between the reaction this time and last time OPEC first announced the cuts, because then it was a surprise. So the market hadn't really been expecting it, so prices shot higher. This time, it's been pretty well flagged beforehand, so a bit of a different approach. I suppose it kind of had to be that way because this was more of an expectation they were going to have to extend these last cuts rather than do it than the first time. But the result of it has been more of a buy the rumour, sell the fact kind of reaction in markets where oil prices actually dropped on the announcement. I think it would have taken a positive surprise. So they extended production by 9 months at the current output cuts. So it would have been needed to be a bigger cut and for a longer period of time for actually there to be a positive reaction in markets. And so overall, oil's still looking strong and this will help the supply situation. But I think probably whether this uptrend in prices we're seeing at the moment continues will depend again on US inventory data. If your inventories keep going up over time, then it's not going to get, this OPEC output cut has less effect.
Okay, what about the whole conversation still about US President Donald Trump? In your opinion, what do you think is the likelihood of him being impeached?
I think it's probably pretty unlikely he gets impeached. But obviously it does seem like the risk is certainly higher than with other presidents. And so they've announced this special counsel to investigate his ties with Russia. That seems to be the angle, if anything, that particularly the Democratic Party are going to pursue to try and get him impeached. These kind of special counsels, they're often in place for 2-3 years. So this is going to dog a good amount of his first term in office, if he indeed ever gets a second term. So it's going to be a kind of noose around his neck. And from a market perspective, I don't think anyone really expects him to get impeached. Hence, there was a bit of an initial excitement. But now, last week, we pushed back into record highs. We erased that whole wobble when that Comey memo came out. Just because I think he's not really likely to get impeached, but it does obviously make his agenda of tax cuts and booster government spending less likely. But that said, the budget did come out last week, the proposed US budget, but it's got a lot of spending cuts in it in certain areas to make way for spending increases in areas like defence and infrastructure. So those left of the political spectrum not too happy about the kind of cuts in healthcare and welfare benefits and things like that. So it might be tough to get that through. So he's still in for a bit of a tough time. Last week, he was just on his foreign trip abroad, so he was kind of making jollies with the Saudis and people in Brussels. So that kind of distracted people a little bit.
Won't be distracted for too long. Well, as we've just been discussing, politics is taking its toll, particularly on cable, so the pound and the US dollar. We have been seeing cable hanging around the 130 handle. Is it still it's a key technical level, obviously, because of where it's been hanging around at the moment. But what kind of catalyst do we need to see a considerable move either higher or lower?
Well, I think we got to the 130 level, and then I think it was that the poll started contracting, which we mentioned in last week's video. We'd only had one poll at that point, but the theme has continued that actually Labour are catching up with the Tories a bit. Yeah. So maybe not the massive majority that some were expecting, though still the Tories expected to come in ahead. So polling, I think, will be a difference maker. And also just what happens with the dollar, because it's been very much a pound-themed move higher. And that's been at a backdrop of a pretty soft dollar. But we had the Fed minutes last week. The dollar actually dropped on those. But still, they are looking at 2 rate hikes this year. The Bank of England aren't looking like anything close to that. So maybe there's room for the dollar to recover, and that would mean that actually 130 holds and pound falls back again.
Okay, what about NFP Friday? I know that's always on traders' agenda. In April, we saw it topped expectations, didn't it? And unemployment rate also ticked lower. What's the market expecting this time around?
We're expecting another good number. Obviously, last time it was 211,000. So you would ideally see another number above 200,000 for the market to feel robust about that June rate hike. But to be honest with you, Rowena, these NFP numbers are having less and less impact on markets. We can go back and look at the number of pips moved up and down in currency pairs when the NFP comes out. It's a lot less than it used to be. You used to get 100 pip plus moves in dollar yen. That's not happening at the moment. I think part of it is because just because the rate path that the Fed have announced is looking a bit more steady.
Steady and obvious as well. It's not so much wait and see what NFP says.
Not data dependent is what they were always harping on about for years. Now it looks like they're doing this gradual phasing out of the accommodation. So it's a bit more known what they're doing, and they're not really surprising either way at the moment.
Is there anything else on the agenda to look out for data release-wise? I know we've got UK and Chinese manufacturing PMI data coming out, as well as EU inflation figure. Any of those worth watching from a trader's or Euro perspective? Well,
so last week we had a lot of good European data, and that was supportive of the euro. So the euro is outperforming sterling at the moment. So euro sterling pair is on the move higher. Euro dollars outperforming cable. So the European PMIs, if they confirm this theme of stronger growth in Europe, which actually is stronger than the US at the moment, then that's a positive for the euro. A big one could be, depending on how they turn out, is the Chinese PMIs, just because we had Moody's downgrade China's sovereign debt rating last week. So that didn't upset the markets too much. Mining companies, other commodities, the Australian dollar had a bit of a wobble because they're all quite China sensitive, but they recovered in the same day. So it wasn't too much of a worry, but it does play into that theme that actually maybe China's slowing down a bit. So if those numbers show sign of slowing, that's when we could get a sharper reaction to the downside of markets.
Okay, I was about to say, so on the back of, depending on what comes out of China next week, how would or could traders choose to trade that?
Well, through the commodity space would be a natural one. So we've had a bit of a bounce in gold and silver recently. Gold, we mentioned 1260 in last week's video. That level's still holding. I think the longer we spend time in that area, the bigger the chance it actually ends up dropping back through. At the moment, I'm still assuming gold and silver on an uptrend. And if we had some positive data from China, that would support that uptrend. If the data's weak, then actually increase the odds that 1260 in gold, for example, holds. So those commodities, an obvious one. If you like individual stocks, then it's the mining companies. Okay, Jasper, we'll have to leave it there. Thank you very much. I'm afraid that's all we have time for today. Thank you very much for watching. Don't forget to connect with us on social media and also subscribe to our YouTube channel as well. In the meantime, good luck trading.